Come to Remora TC to trade like a shark and not get eaten by one. Let's school together to protect and grow our money. Hi everybody, welcome back to my channel. It is Tuesday, October 7th. The market just closed. Let's get right to looking at the tickers. Our usual list here, we will start off with triple Qs. And you can see that triple Qs continue to make all-time highs over here, including today. At the same time, this overhead resistance remains in play. It's pretty obvious with the way the chart is moving that the price is going upward, right? There's no denying that. But you can also see that the momentum change is taking place down here with bearish divergence again. So it continues to build, okay? More and more bearish divergence. Let's annotate this like this, okay? My overall prediction remains unchanged. It is still further low prices for triple Qs. I'm just sliding my arrow over. Actually, let's redraw it a little bit. Like this. Let's see. Right. Still further low prices. Likely to bounce off of this. Come back down, bounce off of the 200-day. Do something like that. Okay. So overall, lower prices remains for triple Qs. Some of you will say, well, isn't this the right time to go long, to buy where it is now for it to go up? I don't feel there's much, my conviction is there isn't much upside for triple Qs. And I've been saying that for a while, okay? In fact, I've been talking about it back over here. So if you are playing it long already, then just stay in your trade. But the overall direction will be changing to the downside. Switching to the gold play, GDX. GDX is doing GDX and the gold play in general has hit all-time highs. So gold today hit $4,000, I believe. That's what the news was preaching. And what I'm showing here is continued divergence. So despite the movement in gold miners continuing to go higher above the $77 range, the overall momentum is to the downside. And because of that, I'm not changing my tune for gold. I still think it is a move to the downside. Okay. So right now, if you're already in gold long, like one or two of my subscribers have informed me, they are either long gold or recently got out of it. Right now isn't the time to get back in. I mean, look at this. Okay. A heavy divergence to the downside. So I'd rather wait. Wait for a better entry. Okay. Switching to Microstrategy. This is the Bitcoin play. This is one of the few stocks that had a buy signal over here, with the bullish divergence occurring twice, okay, on the longer time frame here, which is the lower line, and on the shorter time frame here. I talked about how this line, this 297 would be support, and it's still in play as support. And I talked about how this line here, the 200-day, could be resistance, and indeed it's been resistance. It peaked through for the past couple of days, but today sold down. And the overall direction, in my mind, remains the same. Right now, it may look like a frightful sell signal, which today included some additional volume. You can see it down here in the lower candle, volume candle down here. But I think it is still a long trade setting up. So it'll probably come back down and then to go on its direction up, okay? So this is one of the few longs that are setting up right now. Switching to Microsoft. Okay, Microsoft. Last week I talked about the lower edge here, this lower edge of the gap fill, gap that was caused, where was it? Oh yeah, it was caused by this earnings report here. Okay, so then the gap took place, it gapped it up. So on this candle, which is 30 July, earnings came out after hours. The next day, they bought it up in the morning and sold it down to this top edge. And then what that did was it caused this gap, the yellow gap. Last week, I said that the bottom edge of the gap would prove resistance, and it hasn't really done that. You can see over the past handful of days, price has come back into the gap. And so my next target for resistance is this upper edge of the gap here. So that will be resistance. That's kind of what I'm envisioning. Overall, the general direction for Microsoft, in my eyes, remains to the downside based on the divergence that took place over here. Right now, this is just a lot of selling. You can see all the red candles down here. The sharks are getting out of their trades. This is a rebound. And I think what this is a, here, let me clean this up a little bit. This is a rising wedge, so I'll show you. Goes something like this. Okay, zoom in a little bit, let you see it. And I'll make it black. Okay, so that's the, let's go like that. The top edge of the wedge looks to be something like this. It's like a pizza wedge. I talk about this a lot. Okay. Right there. All right, so what we have is a flagging action. Just kind of draw it out for you. All right, so let's make this darker then, just to highlight a point. So here's the, okay, here's the flag. Just kind of go up like this there. You can connect this too if you want, something like that. The point is, it's an upside down flag, okay? So here's this part, the triangle part is the flag. Here's the pole over here. And if you find if you duplicate the pole, I'll make a clone of it and move it to wherever the price breaks, okay? So let's say price breaks over here, somewhere over here on the 16th. Wherever price breaks, then the other edge of the flag gives you some sort of measure of where price will go next, which is this 467, okay? So that's kind of a guesstimate, right? It's how some people do it using this type of flag annotation. I don't particularly use it all the time. It's just part of my tool set. I did annotate here that price is going to head down to the 200-day. And where it does that, it just depends on when price breaks down, but it will break down. What you saw happen yesterday and today, Monday and Tuesday, this is kind of like an island top. Price is behaving above the flag with not a lot of volume down here. And they'll eventually sell it back down anyway. So I'm going to remove this flag annotation. This was meant to kind of inform about a particular way of doing technical analysis using this type of flag drawings. I use it sometimes. I talk about the pizza wedges, but overall, the direction is downward. You can see that here, okay? That's Microsoft. On to Tesla. Tesla also is bouncing around, continues to bounce around at the top edge of this trend line here, this one here. And I talked about how when it breaks, underneath and will hold underneath, then I see it continuing to break down to get to this bottom, this lower trend line here. Okay, so my annotation isn't changing. Overall, I still feel Tesla will go down to this 322 eventually, maybe in, I don't know, a couple weeks. Okay. The general direction for Tesla is based on this bearishness right here. So the bearishness that appeared, it's going to trigger the sell, and that will be coming relatively soon. Switching over to Palantir. Okay. Last week I talked about resistance overhead here. Indeed, Palantir has come up on Wednesday, Thursday, Friday last week, hit this, attempted to reach and break through this resistance zone, which it hasn't. You can see that some volume came in on Friday and price came down. Used the upper edge of this gap fill as support and has bought it up a little bit. It's going to continue to break down. So there's no change in my annotation. This is the move for Palantir. It's going to be coming downward. Okay. Over to Northrop Grumman. Northrop Grumman, over here, I drew this trend line up here and talked about it as resistance. But you can see that price pushed through on Monday, and today it held a little bit above it. I'm not convinced that this is the signal to go long. I'm sticking to my guns based on my analysis that this is going to be continued selling or resumption of selling for Northrop Grumman. I'm going to extend this a bit here. Give me a second. Okay, so right now its price is above it. So there may be some support above here, but I don't think it will last up here for very long. It will break down. Okay. Switching to the automotive sector, GM. All right, so for GM, it's pretty obvious there's been a breakdown here, all due to this bearish divergence down here. I put the shark up there to tell everybody that they're going to get out, and indeed, the selling has started. I'm just going to slide this over. It is overhead resistance, but really price is now underneath here. So maybe it's best to go like this. There's resistance underneath. So what I see happening over the next, a couple weeks, price will continue to bounce and battle underneath this trend line, and then continue to break down. That's just the way the sharks like it. They want to get out of their trade, sell to the small mom and pop like us, and allow us to give them their profits. Let's go over to a long play GIS. Look at this. Okay, a lot of sideways action here, accumulation phase. You can see that the bullishness is extensive, goes all the way back to November last year, almost a year of bullishness, okay, building. And now this is the accumulation phase. I put the whale here to let everybody know the whales are jumping back into the trade, okay? And it's just a matter of time. My annotations aren't changing at all for price to continue to go up. The 200-day, I'll slide it over a bit like this. 200 days moving like that. But anyway, a lot of zigzagging prices. The price action will continue to push upward slowly. And I hope you're in this trade because I think this will be a good one. So I am in this trade. I took an entry back over here. Maybe 22, 23 August, an entry over here. Okay. All right. Switching to another long play, UPS. UPS is behaving as expected due to all the bullishness that I talked about over here and over here. I put the whales here to let you know that they are the big fish. The whales are coming back in to go long. I am in this trade long. and it's behaving as expected. So enjoy it. The other long play, Lululemon, the bullishness right here, the signal here, and the bounce off this extensive trend line. I talked about the trend line in my last video, how there were many points all along here where price behaved a certain way, respected that trend line. And so the entry was due to respect here with bullish divergence. And I am in this trade. So yeah, I think it'll be a good one. Up to the 200-day, maybe a 60% move. So we'll see. And that's a wrap. Okay, so I hope you all found value in this review of the tickers. And thank you to those who helped spread the word. So the last time I did a video, I think I was at 98 subscribers. A week later, I'm at 105 now. And what I said was, if I reach 100, then I'll do a video about the ecosystem of the financial markets. I still have yet to do that because it takes a little bit of time to do an educational type video versus just a review of the charts. So give me a few weeks to polish up the material, and I'll be sure to release it so that you can learn my take on how the different players behave. The stock brokerage that you use is a key player in the market, as well as your 401k plans and your pension funds and all the other players in the market. They all have their own strategy to make money, and oftentimes it's off of your savings. Okay, so anyway, give me a thumbs up, share my material with your friends and family, and as always, good luck with your trades.